The code for everything is this. This is something I haven't showed to everyone before. If we can predict liquidity, we can get close to predicting prices. Thus, here is all the code against the NASDAQ. Accordingly, it predicts that the NASDAQ will reach 27,000 by June 2025. For those of you who want to play crypto games at home, this is the identical. You can reach a maximum of $400,000 in Bitcoin with this cycle. Here I am again, bewildered. That can be half right and half wrong. Not that it matters to me. Be that as it may, a fairly large structural increase in prices is imminent. Famous macroeconomist and ex-Goldman Sachs executive Pal explores his everything code theory, which aims to prove a link between asset prices and the balance sheets of central banks, particularly the Federal Reserve's. Pal maintains that central banks rescued the world economy from certain doom in 2008 after it had reached a turning point that ought to have been totally disastrous. Hence, investors can take advantage of the government's economic measures to protect and increase their wealth, according to Pal, even though the currency would continue to depreciate. Higher asset prices are a direct result of central banks printing more money. According to Pal, the present liquidity cycle is about to reach its top, and then we will enter a contraction, which will bring about the next crypto winter. Now I understand. No one took me seriously when I initially began to mention that liquidity and debasement are the primary factors influencing asset values. And from this point on, nobody jokes about it. Here we have the NASDAQ, which correlates to total liquidity to the tune of 97.5%. It is the engine that propels all assets. Just why is 97.5% not 100? The NASDAQ outperformed the market by 2.5% due to a secular trend in adoption. Because of that, it doesn't map perfectly. That is really insane, you know? The second thing I've tried to communicate is incredibly tough for folks to grasp. The stock market is a hotspot, but everyone goes, "You're measuring the incorrect thing, I'm telling you." Since debasement alters the price of assets with a limited supply, we'll refer to them as equities, but it has no effect on the pay or profits that serve as the variable input. Wages, according to this economic theory, rise in tandem with GDP, while assets rise in tandem with liquidity and debasement. Rich people get richer and poor people get poorer because one goes far faster than the other. Earnings are fluctuating, and this is the same factor that determines equity valuation. They align better with the expansion of GDP. The debasement of a currency drives its stock price. In the long run, this outdated metric makes stocks seem more expensive. When we weren't devaluing the currency, this measure worked well. In light of the global debasement of currencies after 2008, it is now practically worthless. Another one that is influenced by this liquidity cycle is crypto. Everything is, really, but I'm going to highlight two assets for reasons that will become clear in a bit. Here we have Bitcoin, the cryptocurrency with the longest price history. Here, liquidity is correlated with roughly 85%. What makes it so easy? Well, this is all a liquidity thing. People think, no, it's the combination of liquidity and technology adoption. There is less of a correlation because technical adoption is the primary driver of outperformance. Once again, the correlation is just astounding. Everything hinges on liquidity. This is something I've felt the need to convey. A key component of the everything code is the awareness that money is king. There's a logic to its placement. No debt crisis can ever occur, and all the governments and central banks are aware of this. If one were to debase the currency, the market would magically rise, eliminating the possibility of a stock market crash with main market drops of 50 to 60%. Everyone here can recall the events of 2020, because assets are collateral for all debt. Their depreciation prevented the asset side from collapsing and thus the collapse of the house of cards. Then we took it out, so you can't have it. That skewed market behavior on the left side, where a crash is possible. Because the magic money printer may make it all disappear, even if it is still very much there, it's going to cost you all because of this tax, which is a combination of inflation and an annual debasement tax of 8%. Once again, printing more money does not lead to price increases. The Consumer Price Index (CPI) is a measure of a variable asset, the supply and demand for goods and services, and inflation is based on this. That's unrelated to this. Only assets, especially scarce ones, are driven by this. Wages are not affected. It is not a revenue generator. Commodity prices are not influenced by it. When individual stories get muddled, it does not emerge from all of these places. They are misguided in their focus. They seem to be equating inflation with debasement. Powell further notes that the macro cycles of spring, summer, autumn, and winter are subdivided within each 4-year cycle. Early spring is when liquidity begins to rise. It kicks off a brief period of price recovery for assets. When central banks inject additional money in the summer, things really heat up. The true magic, however, occurs in the autumn, just before the dreaded winter months, when huge injections of liquidity occur all around the globe. What does this mean for the present crypto cycle, then? Asset prices will reach their peak at what point in time? When liquidity reaches its peak, what happens to top crypto assets like Bitcoin? You can find further footage from Raoul Pal's film here. Looking ahead, let's examine liquidity. This is not going to be flawless. Using this kind of stuff has never been done before. But this is where the ESM cycle comes in handy for predicting the global liquidity cycle. Additionally, it indicates that September 2024 is the highest month for worldwide liquidity. Moreover, it remains positive until December of 2025. The assets reach their maximum value, according to our research, either when the liquidity cycle turns negative or shortly before. However, though, it may reach its zenith anywhere along the road rather than at the pinnacle of liquidity. In general, though, it tells us that we can expect a mostly positive 2025 before things turn terrible again. At this point, you may be wondering why it isn't performing up to par. Take a look at solvency. The logic is wrong. The situation seems to be in its early stages. We have a substantial amount of cash on hand, regardless of whether it's assisting China by introducing dollars into the international economy through the Chinese currency. Plenty of liquidity is on the horizon, whether it's for the Japanese, the commercial real estate market, the upcoming election, the draining of the Treasury General accounts, the printing of money in China or Europe, or some other event. They wanted inflation to decrease, so they were a little sluggish with the enormous injections of cash. For the time being, we believe inflation has died. To begin effectively jamming liquidity, they should thus obtain the go-ahead. Let's pretend the delay is due to the fact that inflation has not dropped below 3% just yet. That is the final item. That will allow us to predict the future of liquidity. Furthermore, you won't believe this, it is very ideal because it complements that gorgeous wood style. Evidently, this is the correct course of action. At that time, the world's liquidity reaches its height. That is the final form it will take. When liquidity begins to decline on its own, we will eventually. June 2025 is the current date. Assets should cool off somewhat as December rolls around, marking the beginning of the winter cycle as liquidity begins to decline. Take these, please. Everyone will take a look at them and ask Ralph Crane, how can we predict this, please, May? I don't do it. I am tremendously irritated by it. The code for everything is this. This is something I haven't showed to everyone before. All of the code that targets the NASDAQ is here, because we can approach predicting with some degree of accuracy if we can predict liquidity. Accordingly, it predicts that the NASDAQ will reach 27,000 by June 2025. Is that when it peaks? Is December when it reaches its peak? However, we are seeking that specific form of guidance. Those log trends are also mapped with it. The NASDAQ index reaches around $30,000. In my mind, that's roughly the aim. Is it going to be lower than that? Is that going to be the limit? I am unsure. Give a hoot. Directionally, right before you start experiencing a larger correction. Here's the same for those of you who prefer to play along with crypto at home. You can reach a maximum of $400,000 in Bitcoin with this cycle. Here I am again bewildered. That can be half right and half wrong. Not that it matters to me. The main idea is that a rather large structural increase in pricing is on the horizon. Once again, from June to December of 2025. What exactly are the dates? When does crypto peak? You have no idea. In all honesty, I don't believe so. It's unclear why, but it would be because we're going to pay closer attention to the 2013-2017